Hey guys, Will Beach here with Great Trades doing this Forex gig for you guys. I'm doing a very small account challenge in which there was $4.02 in this account as of Sunday. So it's been 1 week. I am Eastern time, so it's almost 10:30 here, and so we'll be wrapping up the week here shortly. No intentions of holding anything over the weekend because this account is so small and we're trying to build it. I've just been taking little wins here and there. We can show you pretty much everything here. The last few trades, 17 cents, 33 cents, 30. These two were pretty good. -3 there, -43 there. There's a big -$4 here. That was scary. That was something, and that was a 0.02 lot, so it's bigger. That was when I was at $8 and lost 50% of it in one trade, and that's because I thought I would just hold it overnight, and overnight it just tanked and basically just hit my margin and stopped me out. But I actually had one 0.01 lot size in there, and I kept rolling with it, so it ended up, you can see here, following that 17 cents, 75 cents, $1.50, 2.28. So I had some good runs in there, and then we just kept chipping away, getting back in our strategy, and you can see here profit over $8, so we're up 200%. I know it doesn't sound like a lot when you start with $4, but 200% is 200%. It means we're being very consistent with our trading, and you can see also that it is a live account up here at the top. So what's the strategy I'm using? Okay, so if you follow my YouTube channel, you've seen me do the biggest thing I teach is momentum swing trades. Well, with this being on a different platform, I don't want to have to keep going back between Thinkorswim and the MetaTrader 4. So I kind of changed my strategy after a lot of analyzing on something that I can do consistently with Forex, and I'm about to explain that to you guys here. This is like nothing else I've seen. I've just taught myself this. Most people will think using moving averages is a very poor way to trade because you're always behind the curve, but when you look for certain patterns, you realize you can get ahead of the curve when you recognize certain things. So with that being said, I'm on a 1-minute chart. That's what I've been doing. I've only been doing 1 minute because I want to minimize my drawdown, right? I want to know where my small supports are and my small resistances are, so that I can take advantage of that, even if it's 1 to 5 pips. That's 10 cents to 50 cents. That's what I'm trying to take advantage of until I can build up and get to a point where I can, change my strategy to a 15-minute chart, where if it has a 10, 15, 20 pip pullback, it's not going to tank the account. So these are things that nobody really teaches as far as I can see. They jump right in. Most of the big guys are trading on 1 hour, 4 hour, and daily, and that's great. Like, it really is. But if you look at this right now and you're like, oh, look at this, it's bottoming out. We have, most people will do like a little block segment and show you the resistance and the support. So we'd say this is support, so we're going to play it up to the next resistance level, and they'll do it on a daily, and they might hold it all week long, and they might gain 100 pips, 200 pips, 300 pips, and that's fantastic. Like, that's a big win. But what we're doing is trying to capitalize without as big of a risk, because they might have to go through a 20, 30, 40, 50 pip pullback before getting to that 200. And the thing is can your account handle it? So let's talk about margin. with this Trader's Way account, I have a 1 to 1,000 margin, which I'm actually only 1 to 500 right now, purposefully to help minimize my risk. And then with that margin, we have to be super careful, right? We don't want it to tank our account. So what does that mean? It means when you're drawing down, you can actually like pay, like I pay $2 for a position for 0.01, which is a micro lot or a mini lot, and I'm sorry, micro lot. So it's standard, mini, micro. Standard is 1, mini is 0.1, and micro is 0.01. And what that means, though, is that when it starts pulling back, it can actually pull back more than just a $2 loss. It can pull back for my whole account value if I'm 1 to 1,000 and literally draw down the whole account, and you'll be done in one go if you allowed it to get to that point. Hopefully you would stop it before that point and move forward. But if you change your margin level, it'll help reduce that. So now I'm at a 1 to 500, and anyhow, so what are we looking at here? I have a custom set of Bollinger Bands. Okay, this is 0.382. That's 0.382. I teach that in a lot of my momentum stuff too. I like it. It just shows nice trends, supports, and everything like that. The yellow line here is a 50 SMA line, so you can see that 50 SMA. And then down here, I went with something a little bit different, and I have a 225 SMA line. 225. The reason why I went 225 is because when you notice with a 200, it stretches past it a little bit more frequently, and you're like, man, like, is it going to break out or not? So I try and put it a little bit further out so that there's not as much of that, like, kind of messing with your brain about whether it's going to fall through it or whether it's going to hold a support on the 200. So anyways, I put 225. So what we're doing is, you see this Bollinger Band waving, right? Up and down and up and down. And then you have your 50, which is your main line that's going to cut through it more frequently. So when we're watching this 1 minute chart and you think, wow, if you're waiting for crossovers, you're too late to the game, right? Like if this 20, because the middle of the Bollinger Band is 20 SMA, so naturally I have a 20, a 50, and 225. So when this crosses below, people look at that as a sell, right? And it is a sell, but what happened when it's crossing over? It's actually on its way up. And this is where people get tricked because they think it's going to continue up because that's what it did, but really then it turns around and comes back down. And then obviously on the flip side to that, we sat here and tracked down and down and down, but it has these big waves and just throws people off. So what I do is I mainly focus on long positions. I don't typically flip back and forth between long and short and long and short and long and short. I only trade in long positions like 90% of the time, and that's because I'm just waiting for the same thing to happen. So basically when this 50 crosses through the Bollinger Bands and then gets really close to the, like, this top line here, it starts getting really close to it, and then I forgot to tell you, this is a parabolic SAR indicator, and we start getting trading above this 20, and we have positive parabolic SAR. Then I look for my entry right above the 50 here, and I just ride it up a little bit above, anywhere in here, and I just try and take that, 2, 3, 4, 5 pips right off the table. We can look at what it is. This one I probably would have been a little sketched because it closed so high. I would have waited for it to pull back, but it's still the same concept. So even if we would have played it here, 4 pips, 40 cents the way I'm trading. Then pull back, right? And we show support on the 50 now. But you see this parabolic SAR? Even though we showed support, we actually tripped it and we're in the negative range, so we can't buy that. So then the next play would have been here, and you see this is just too far out of range. Like these rips are too much, so this is stuff I would stay out of. What I like to look for is a little more consolidation. So look at this nice cut through. See how we cut through right here? Alright, we're actually on the outside of it. That's my buy signal. Well, that's my ability to buy, but I don't actually buy until I show the right support above this top Bollinger Band, and when this will get, you know, a little bit closer. You see we're trapped under the 225 right now, so we have positive SAR, but you know we've been in this negative range, and so we're kind of just waiting to see if we can get back support above this. So that's kind of the idea. There's a lot of other little details that you have to kind of learn as you go, and I can try and explain them. For instance, this MACD down here has the red trending line through the bars, and a little trick for you for selling and buying if you wanted to go this route is that when the red line clears the bars, that's the signal for the reversal. So if you look right here, right about this bar right here, the red line starts clearing, and then all of a sudden we start coming down, right? And it had a little boost, but look, ultimately it came down. And then if you look on the bottom right, we trended all the way down. So if you would have sold out of your long position, technically, even if you wanted to take a short position, you could. It's just not how I do it, because when you're trading above these support lines, you're in a long trend, so it's very risky. It means it can just reverse and keep going up. So I don't mess with the shorts at this point, but technically you see it would work for a little bit. And then we went way down to the bottom, and right when we started peaking, we cleared, the red line cleared the MACD. See that? It cleared the MACD, and now it started to trend up. But now we're below all these, so that means there's still more momentum to the downside, which is why I don't trade off of these. And you can see that right now. Perfect example. What's it doing right now? It's coming right back down. So that's why I don't use these as a sole indication, but you see they help you understand where the movement should take place. And boom, it's falling perfectly as I'm saying that, because it's just too much of a risk. So you had long SAR, you have a buy indication here, but you didn't have any type of support, of correct support. Without these telling you exactly where you should be, there's no position to take. And it doesn't matter what time scale this is. This will work on any time scale, any stock, any Forex. I've gone and back tested it all. I've been using it. You see I'm up 200% on this small account, and you just have to wait and be patient. And this small account build is taking an extreme amount of time. Like, people, you have to understand the amount of time and patience it takes, because if you treat $5 like I'm just going all in on this and then you lose it, like, what did you expect? And if you do the same thing at $100, $500, $1,000, the same thing's going to keep happening, because your position sizes are going to be too large. You're not waiting for the right confirmations, and that's just what's going to happen. Like, there's no way around it. And I want to teach you guys. I don't teach a course. Like, I mean, I don't pay charge for any courses. Like, I just teach people, and hopefully you can learn something and, you know, move from there. So what you're witnessing right now in this 1 minute is this 50 wanting to pull down, right? And it's going to test this line. But what you're going to see is a strong pullback. But those are lessons that you'll learn on you know, another time, because it's just, once this gets closer and closer to this is going to want to actually meet back up with it. But again, you would have to wait for the confirmation at least of this MACD to clear, the red line to clear again. But anyways, so I'm going to show you a good example of a better setup. I'm going to change scales just because this is really hard to scroll through because of all the movement. It keeps bouncing me back. So this is a 5-minute scale, and you see we are actually trading below the 225, which means we were mainly, and below the 50, right? We're mainly in this downtrend for quite a while. I mean, you can see here it started way back here and just trended. That's 15. So let's go back to the 5 though. So you see this this is consolidation, just repeatingly up, down, up, down, up, down, up, down. And that's not really a great place to trade. You can get some out of it, you know. You can get some movement. That was 5-6 pips. But these aren't the trades you want because they're trading below. So you constantly get rejected by the 50. Rejected. Rejected. Then all of a sudden you get this pop right here, right? And it closed above. And it went a little bit higher. And then it pulled back. So let's just say, and you have positive, the positive SAR here. So let's just say you bought at the top of this candle, right? That's only 3 or 4 pips. So you probably wouldn't have sold. But then you would have been down, you know, 4 or 5 pips. That's what I'm getting at, is your pullback and your drawdown is not crazy. And then this would have been your test, right? Did it flip? Did it close below 50? And, you know, did it change SAR direction? And the answer is no, right? So if you would have been watching closely here, you would have actually then gotten in, and we're going to go back to where your buy would have been. Okay, 10 pips there. You had one sign of a reversal right here, and with all this resistance, that would have been like, yo, I need to get out of this because I don't know if this is going to keep getting rejected or not. So, you know, you could have taken 10 pips here, just say 8. So that would have been 80 cents, or, you know, depending on your lot size, $8, $80, depends, right? If you have a full standard lot, that's this alone is $80 if you have one standard lot. You would have been down 50. At one point, you would have been up 80. And if you really didn't care, like you're doing trailing stop or something, at break even, and just held it, you could have continued on to your next sign of a reversal, which would have been like MACD clearing and SAR reversal. That's 32 pips. 32 pips there, and this is a 5-minute chart, guys. 32 pips there. Again, standard, 320 bucks, 0.01, $3.20. So you really have to be patient for these moves, but they'll happen over and over and over. So now look what's happened, right? We had all this crossover, and you could have been in and out of this, right? You could have been in and out of this, no problem, because as long as you're trading above the 50, and then you keep getting positive SAR moves, like this, you could have played it. You could have stayed in it, You had one little reversal that would have been a little bit risky, so you might have wanted to sell there. Rebuy in here when it confirmed back. Another big run, so you could have gotten right here. Another 18 pips. And then you can see here, MACD cleared. So you would have had to make the decision to kind of get out somewhere in this range. 50 held again, but we're below the SAR. So then positive SAR, even if you would have bought at the top, this would have been a little more sketch. As you get higher and higher and higher, you have to expect more and more pullback. So to me, once I get to a certain point, probably this range, and I say that it's kind of random, but when you get like a big high, like when this was your high, and then all of a sudden you get this big high, like it's got to pull back at some point, especially with your MACD. Look how high they're getting. That's just really high, so it's going to be coming back down. Alright, so with that, now what we're working on is we're below all the 50. My next little trick is this. When you have this 225 and this 50, I take 0 trades as long as the price action is in between these two, like this on the way down. Since this one was coming up and breaking through, and then tested down and then broke through, and we were looking for the reversal since it had been down the whole time, that's okay. But as we're coming back down off of these highs, we won't play any of this range at all. We need to wait for a full confirmation. 9 times out of 10, when it breaks this, it wants to find support down here at this next support level. But if it has enough energy built in, it'll just kind of hover this range. It'll clear, your 50 will clear the Bollinger Bands, and then you'll get another little pop. But at that point, we're losing steam, so we have to play to the resistance level of the previous highs. So somewhere in this range, I would have played from here to here if it holds. If not, and it comes all the way back down, we're going to wait for it to clear. We're going to wait for our new signals that tell us it's positive, and then we'll go from there. So here's the next one. So we have, this is a 15-minute chart, so it's all the same one, but I just want to show you on different scales what it looks like. So our 50 clears back here, right? So we know we're now looking for our buy entry, and then as this, but you see these gaps and how it's stuck under the 225, there's definitely no entry there. The entry can definitely occur a little bit more of an indicator is when the 225 crosses back here. And again, this is people going, wow, that's a sell sign, right? Because now you have this. Well, yeah, it is, but that means that you're going to have a big pullback once you get cleared from it. So here we go. This line is dipping. You see how close it's getting, but you see how it's all negative SAR, and then all of a sudden we get pullback and we get positive SAR right in this range, but we don't really have the true support yet. So we can buy in, you know, as we show support. We're getting rejected at 50, and you see it pull back. Then we test again and we break above. Clear indication that we finally want to move up, and then it closed above, right? So then we go in and we have big moves. First reversal of SAR is right here, and you kind of see it consolidates first. So any of these would have been fine to sell at, and that right there is 25, almost 26 pips. That's a 15-minute chart, right? You had to be prepared, depending on when you decided to buy in, to have a 7-pip pullback. And again, remember this is another one. The MACD is clear here, right? So now we have positive SAR. We have a nice tight 50 to this range. The MACD is clear. So this allows you to get in just a little bit early if you want to take a little bit more risk and then break through. And then as long as the line is inside these bars, you can keep playing it. If you want to skip some of these SARs indications and look at your MACD for a second confirmation, and then it wouldn't be until this point right here. So if you would have taken full range, you'd have been about 48 pips. Guys, it takes time, it takes skill, it takes energy, takes patience. I want you guys to be successful. I will continue to cover this strategy so you can learn more and more if you think it's a good strategy for you. It's working for me. I go back to the 1 minute, and it's the same concept. Look at what we're looking at. The same exact patterns happen over and over and over. We cleared this range. We got stuck at 225. It tanked down. The 50 is about to cross this, and as it gets down close, we're going to start building and building and building. Be right back. Alright, sorry about that. Someone was at the door. So if you want to hang tight, it's kind of the tutorial, but I'm going to show you guys on this 1 minute. I will actually take a position, whether it turns into profit immediately or I got to wait a little bit. I mean, that's, you know, kind of the name of the game. But what we're looking at is clearing this MACD. We're getting close. We're going to see it shoot up in the next couple bars and try and take over the SAR. And then but it's most likely going to get rejected in this area, and we got to wait for the 50 to come nice and close and start giving us a nice curl around. So even then, I mean, this could take another 30 minutes or so, to be honest. So I might have to pause the video, take a position, pause the video, come back, but we'll see how it goes. So the reason why I'm on USD CAD right now too is because the Euro USD has been falling like crazy, although it might be, since this is going down, it's probably going up, and I might be able to take one there. So this is the Euro USD here. Same thing, same exact setups over and over and over. Look at these stretches, right? Rejected. Comes back down, clears. See how it clears here? Pulls all the way back down. This one didn't get even that close, and it still ripped up, right? Then it came back down when it got rejected at 225. Tried it again, got rejected, and tried it again. We're back in positive territory here. But what do we expect? Let's look at the next one. This is a 5 minute. So this is actually a really good example. Look at the MACD is cleared. It's ready to go up. We have cleared this range here. So like I'm actually better off taking a long position here to try and retrieve some of this 225 than the other one. This is what I'm getting at right here. So let's take this position. Just going to take 0.01. Plus I like that the Euro USD keeps a very tight spread. But you can see right now, look, 40 cents down, 40 cents down. So where are we at? 50. So we just entered this position literally like on the new symbol. So pullback is kind of natural. Let's see what comes of it. So if we were to kind of start closing below the 50, I'd be concerned because I wouldn't want it to pull all the way back to here to change directions on the SAR. But let's see what happens here. So I did this on a 5 minute chart. We can go back to the 1 minute. So again, it's kind of the same thing though. We already passed through all this initial stuff and we're still in positive range. You see, positive SAR. We're still in positive MACD, but that's where it's like starting to get a little bit, you know, sketch. It has pulled back. So you see this gap on the MACD and how it was pulled back, and then it touched, it went up, right? Touched and then pulled back again. So now we're within the range again, but barely. So if this one wants to pull back and reverse, we might end up seeing more downside, but at the same time we're also pulling this 50 up. So we want to hold on long enough to make the move. See what it looks like on these. I know it's been down for a while, so you can see here on the hourly I just bought at the top of this one, so it's a little bit sketch on that because it's been just tanking. So we're hoping that in the next, well, maybe when the new hour hits it pushes up a little bit more. So we just got to be really careful because you see how dug into the MACD on the downside this is. I mean, it would take a huge rip up to clear that, which, you know, maybe it will, maybe it won't. 30 minutes. So we've technically cleared this Bollinger Band, which is a good sign to see consolidation and a reversal. but we're very far out of the range on this 30-minute. But look, it actually did put us back on the positive SAR side, but usually you just don't see anything. Now what I'm hoping though is, because you see how sharp this move is that we get this V shape back. But again, we're only playing the smaller scale. Here's the 15-minute chart. We're cleared on the MACD, which is a good sign. We're here. Everything's cleared. Looking for consolidation. 5-minute is where we actually bought, because the consolidation had already started at that point and we were moving up in the right direction. One-minute candles, we're holding on these supports so far, but you see how it has cleared the MACD. So where you see it's all in a line, right? It's testing, reversing on the SAR. It's already reversed on the MACD, but what we're looking for is a hold of support and the reversal and the MACD to pull back up. The only thing we don't have right now is we didn't wait for a nice upward starting to curve, but it's hard to determine when you're at the far right of the scale, right? You can see it in hindsight, but it's hard to determine when that will begin. So you can only go off so many confirmations. And if we're trading above these and we're cleared here, we know that as long as the MACD though is below the 0 line, it's a weak signal. You don't get the strength and the power until you start getting above 0. So any one of these would have just been more of a correction because the trend was down. So even now this could just be a correction, but we're trying, look how close we are to the 0 line. We're literally right there. So we're trying to make the reversal, and it looks like it's starting to push just a little bit above 0. Yep, you see that. See if we can get a decent breakout. So then where would our sell be? Our sell can be anywhere in the next support or resistance levels. It can be here, here. You can use the 225 as your basis, which is actually really far up there because of how far down it's gone, but it means it probably won't make it that far. Not on this run. Let's see what it looks like on the one. It's holding, barely. But you see how we're starting to flatten out? That's what consolidation is, right? Up, down, up, down. Starting to flatten out. Flattening out shows signs of reversals, which isn't good for me right now because I bought on the 5-minute chart, and this 1 minute could reverse, but it means that the downside should be minimal, you know, probably somewhere in this range. But at the same time, again, we almost have a positive crossover, the 50 over the 225. We almost have a turnover on time, so the 1 hour candlestick will be new and fresh. So see there. There we go. Push. See that? It's showing a lot of resistance right there. Remember, the overall trend is still down. So, like, this is, you got to be really careful on this. You know, I should be looking for the reversal to the downside. Or not reversal, I should be looking for the pullback and then continuation downside with as heavy as it's moved. But you know, we'll see if we can get a little jump in there. It's really weak, so I wouldn't be surprised for it to come down and retest these. There it is. So the SAR just shifted. We knew that that was coming though, so this is kind of what I was getting at with this, how this MACD is a good indication, because that means back at, you know, 1, 2, 3, 4, 5, 6, you could have been out of your position if you wanted to play it safe. You could have waited, right? But we're about to get the crossover here, so I'm not that scared of that reversal right now. I want to see what this can push through, see if it can get us up, make us a little money. And you see this lower, 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 right? Lower, lower, lower. So again, just so much resistance right here. I might be a little bit premature on this, but I don't really have a worry as far as like I could hold this and make money eventually on it. Just might take a little more time because it's just forming consolidation waves. So I mean, at any given point, like, we could be in the right move. So even if it comes down now, I would just have to hold it, you know. Like, once you realize that you have done everything right, the only thing that's not right is your exact timing. There's no real way to know exactly when the market is going to just give you what you anticipated. So, but it's a very good chance that you anticipated correctly. You just have to wait for it to do whatever it's going to do. And honestly, if you see if this is pulling back, I'm going to go back over to USD CAD, and you see what's happening here. It's getting ready to, it's cleared on the MACD. It's in a positive. This is cleared. This is coming down. So if I have to, what I'll do is I'll take a positive positions here. Well, this one's weakening, and if I get the right entry here, I'll make money on this one while this one's losing, and it'll kind of soften that blow until this one reverses back. So this is what I was talking about though. Like, this is when you trade it from here, if you get comfortable and you get above this and you trade it from here to here, that's ideal. But I wouldn't take new positions in this. Like, anywhere in that range. I wouldn't take any new positions in any of this. There's just too much uncertainty. You got to get your position right at the confirmations, right there. Support held right at the 20. We've obviously cleared here. Alright guys, this video is getting extremely long, so I'm just gonna pause it and then I'll come back to it. Alright guys, I'm gonna resume this really quickly so you can see what happened. I never took a position on USD CAD because this is what I was talking about. Look at that angle. It's just coming down and down and down and down. So even though all this was looking positive, it just wasn't, it hadn't consolidated, it hadn't started moving sideways yet and giving you a nice close proximity that's more flat, where you'd be able to take. Now it is getting there, so you can see the waves, right? It's getting there, so it's probably going to reverse soon, but you see it just got rejected right off of it. So it looked positive on MACD, positive on the SAR, but this lineup just wasn't correct. You can't have them running parallel to each other down. There's just nothing there. They need to have consolidated a little bit and move a little bit sideways. Unless it's a straight V, straight down and then straight back up, like that, then you have to wait. And you see this is just tanking more. And because you're below, this would actually be the short opportunity. So the moment you get rejected off support and then you have your positive, SAR or whatever, you can short. And you see we're in the middle of this now. Means we're going to carry it downward most likely. Let's go back to Euro USD. So we had this pullback, and now we're back into positive territory. We're going to see if we can get the next run up here towards our price. Now, if I was really just wanting for confirmation, I could probably buy another lot here, but I'm not going to, since I'm already up, I don't know, $2.50, almost $3 on this small account just today alone. Again, there's just no power behind this yet. You see where it's starting to get back to the above zero, but you want this line, this red moving average to be just dug in to get some good move. You can see we're in positive territory right now, but if we don't get a little more strength behind it, we're going to get stuck, but I think we're okay. So when you're in an overall downtrend and you get like these decent breakouts, like you should definitely sell them immediately because they usually fall twice as hard, twice as fast. So it's not that you can't play long positions when your timing is right, but just know that they're usually just not strong enough, so they're going to come right back down. So we're on a 5-minute chart, right? That's when we bought. So we're going to be looking for 5-minute exit point, which, maybe we'll get in these ranges here and here. I might have to wait for another round of consolidation, to be honest. It might pull back again as as the 20 meets the 50 and then push back up. I mean, it could happen either way. I mean, already this position has been 5, 10, 15, 20, 25, 30, 35 minutes. Which is another reason why I like to choose the lower time frames, because even then you're going to be holding an hour, 2 hours sometimes. So if you're trying to play off of like a 30-minute, hour, or 4 hour, or daily, like that's how long you have to hold a lot of times to get what you're looking for, because if it's a 1 hour chart and you get any kind of pullback, well, you're waiting hours and hours to get the same formations, right? Because everything does the same formations. This is doing the same thing that the 1-minute chart did, and the 1-minute chart does the same thing the 30-minute chart. Like, they're all doing the same thing, but over a longer period of time. So it's not that you won't hit your marks, but you just got to be prepared time-wise and understand, like, if you're buying on a 30-minute, 1 hour, 4 hour, like, it can take you a long time to hit your marks. A lot of ups and downs. When I think there's just too much money to be made on the smaller scale to just keep money on the table like that. So, that's just me personally. Like like I said, a lot of the guys that you see on YouTube, they'll hold for a long period of time. And they're fine with that because they're using these bigger ranges and blocking out their supports and resistance levels. And, they're fine with that. I'm trying to just take whatever money I can off the table. Once I get my lot sizes up, then you'll see. Like I've done it like my demo account. Like I do a standard lot with my demo account. See that rejection there? That's not a good sign. Um, and I get the same move, right? I trade the same thing. Well, this same move is $150 with a standard. Alright guys, I'm not going to make you wait through this painstaking uh, process of waiting for it to take, but anyways, I hope you guys have learned something. Hope I'll keep putting these up there so you can see. I have found the most consistency with this strategy. The biggest thing is that, again, like, make sure that your longer time is also doing the same thing. If this, like for like this big red candle here, like if I was in the middle of this downtrend right here, and then I tried to play a long position on like a 1 minute or 5 minute, like it doesn't work because your bigger scale is just too heavy on the downside. So it's just not worth the risk. You need to be playing. Ultimately, ideally, I would have waited, if I wanted any long position, like I like the hourly to be in a long position, and then you can get to your confirmations and start profiting a lot faster because your bigger scale is ultimately what's happening. So anyways, so it was a little bit of bad practice for me to buy in at this level, even though everything was right, because even though like the 15-minute is showing like it's ready to consolidate and start moving, I mean, this is still so far out of range that, it's getting rejected right here. And if it gets rejected, it could literally just fall out of its seat. And it's starting to. And if it does, I'm just gonna have to drop this for a loss in it, just because I'm up like $2 or $3 today. That's fine. Like, I'm not worried about it, but I could have taken better precaution just to make sure like I was gonna get what I was looking for faster. Anyways, I will hit you guys up on the next one. Hope you enjoyed, and just keep learning.